Hi, my name is Clay Allen. I'm with the Old Capital in the Atlanta office. And you know, Old Capital is kind of a one-stop shop, if you will, for all things multifamily lending. We do that nationwide, do a lot of volume, and would love to help you out to that end. However, I'm in the middle of putting together some asset management videos, and this is my third one. It'll be number three of, I don't know, 6, 7, 8. I'm not sure how many videos I'll put together yet, but my hope is that it will create value or add value to you, no matter what your desires are, whether it's to be an asset manager yourself or to be a GP. So with that, I wanted to focus this third video on something that doesn't get a whole lot of airtime for whatever reason, but it's right front and central to the asset management position itself. You know, as an asset manager, you're really kind of a strategic thinker. You're operating kind of at a 30,000 foot view in between the capital markets and the property itself. And so one of the things you want to convey to the property team is gives them perspective on the business strategy, the long-term 5-year hold, and maybe perhaps the strategy for the coming year. And the way that's done is by the business plan. So wanted to cover the business plan in a little bit more depth than it usually gets. And so let's get to it here. This is a template that I just put together on Microsoft Word. Obviously, it's nothing fancy. The reason I did this the way that I did is that I've worked for 3 different companies now where I've served as an asset manager, and each one had their own template. They all looked different, but they all had the same kind of meat, if you will, these types of sections. They touched on every one of these. So I incorporated all of this into a one-pager. And that's another commonality that I found with these other 3 companies. They all wanted it to be succinct, kind of a quick read. We don't want to read a book on strategy. This is simply the strategy documented into a concise format. So, you know, again, this is just an example. This is Element 400 at Perimeter Center. Hopefully that's not the name of a real property. If so, I apologize. But I just wanted to put together something as a template. Happy to pass this along to you, by the way. I will send it to you in an email. If you want to shoot me an email, my contact information will be shown here in a minute, and more than happy to send it your way. So let's walk through, section by section. The asset description, don't overthink this. This is simply you writing to someone who doesn't know the property very, very well. So it might be a lender, it might be an owner who already has 100 properties, you know, in the portfolio that he or she can't keep track of. So this is just simply a reminder to them of what the property is. Any unique characteristics that you might see in the property might differentiate it from others in the market. It'd be good to put that here as well. All right, so don't overthink that. Market dynamics, I put this in here. I don't want this to be a regurgitation of, let's say, a CoStar report or a Yardi report. Those things are fine. The more data you have, the better, but I wouldn't get too into the weeds, into the data, what things are going to look like 3 years from now, right? Focus on what's going on in the market surroundings. Not even like if we're here in Atlanta, I don't really care so much what's happening in the macro market for Atlanta. I really care what's going on across the street, because that's going to have a greater effect on your rent growth. If you have some bad actors move into the neighborhood, or perhaps on the flip side, you have a public sector shopping center that's going in, and all of a sudden that makes your property walkable, more desirable. Those are things that can help add to the theme of the strategy, whether it's for 5 years or for the coming year. So keep that in mind. Incorporate any type of feel-good stories or concerns about the market in this area. And again, if you have some market data you want to put in there, that's fine. That will help bolster your argument for incorporating those growth rates or occupancy rates or whatever into the budget. So the next one is top priorities, and this is kind of the meat of the business plan. Now, I want to pause here real quick and remind you, I can't remember if I said this earlier or not. If I didn't, I should have. This document is something you're going to hand off to the person who's preparing your budget each year. So you're going to have this at the very beginning of your investment, and it'll be more of a, I don't know, whatever your hold period is, a 5-7 year look. But then you're also going to have one for each year. And it's going to be slightly different. As you kind of get in, you start operating, you start learning the property, the market a little bit better, and you encounter maybe some hurdles, or maybe you get some tailwinds. You can change and alter your budget. each year. And you do that before the budget's done so that you can kind of hand that off, this one pager, hand it off to whoever's preparing the budget and let that be their guide for how the budget should look. And here in the top priorities, this is where they're going to get most of that information. You can kind of see how this is supposed to be the top 3 to 5 priorities you want to see in the coming year. And this is where I want you to be very concise, very specific, as I wrote. If you want to see effective rents grow 3.75% over the coming year, document it right there, and they'll incorporate that into the budget, or you should make sure that they do. If you have an occupancy hurdle that you want them to maintain or exceed on an average basis over the coming year, then put it there. You can see where I got very specific. I said we want to renew 60% of our expiring leases on average, or at least 60% that is. And then on your renovation strategy, this is where you can really lay out how many you want done, what the budget is, what the premiums you expect are, and maybe a pace that you're trying to get completed. And you may even want to sneak in here, how long you want the unit to sit before it leases. Ideally, you want it at least before they're completed with the renovation, but reality is you might have 3, 4, 5 days where it sits vacant. You don't want it to go 2 weeks without being leased. If that's the case, maybe you're pricing these a little bit too high. But I digress. This is the section where you really want to be specific and where you want your metrics to show up and make its way into the budget. So another area where you could address is any kind of required capital that's accretive to value. You want to make sure that makes it here as well, because that's a big ticket item and more than likely, and it's also something that's going to drive value. Speaking of moving on to the capital program, this is an opportunity where you can, in my case, what I did here was highlight anything over a certain dollar amount, or if it's a high value program. So in other words, I put a minimum dollar amount of $25,000. I want to mention anything that's of $25,000 value or greater that we're going to spend. I want to put it there. But if it's a $15,000 dog park, I still want to add that because that's going to add to the value of the property and make your residents happier. It's just something that is going to be a well visible capital project that needs to get done. Of course, any lender required repairs, that's very sensitive. You want to make sure those are done in a timely basis and in that budget. So you want to document that there, especially the due dates for those, so that your property management team can go ahead and aim to have that done maybe a couple months in advance. So there's no having to go back to the lender with your hat in hand and asking for a reprieve. So make sure that makes it into the capital program. And finally, I didn't highlight it, but the loan summary is what it is. Just an opportunity for you to document the particulars of the loan. And this is one thing that will be good for you, just to be able to grab this business plan, go back to the business plan, and if anyone asks you anything about the debt, it's going to be right there. Again, concisely put right there. That way you're not digging through loan agreements and whatnot, trying to figure out what the terms are. It's all laid out. The one thing I did not include here, which I'm looking at right now, is a biggie. It's when the loan opens up for prepayment. You see prepayment there have YM, that's yield maintenance. Depending on the loan you get, you'll have different prepayment structures. You want to document that, and as an asset manager, you want to know when that opens up, or when it makes sense to, or when you're opened up to go ahead and sell the property or refinance the property. That should be always on your radar, because you are always all about timing of a capital event as an asset manager. So, all right, so that's that. Again, you see here, I have some reserve balances and escrows. That's good to have there, so that you know that there are reserves and that you need to monitor those. Covenant hurdles, obviously something you want to have documented and make sure you're tracking. So, I did highlight it. So anyway, that was the loan summary, and that does it for the business plan. I wanted to go ahead and provide you my contact information. Again, if you want a copy of this, more than happy to send it to you. Phone number, email right there. Please feel free to reach out. I'll be more than happy to send it to you. And thank you again for watching. I will see you on the next asset management video. I appreciate it.